Hi, welcome everyone. My name is Balaji. This is my first video. Um, I have around 14 years of experience on stock market, in investment, trading, trading in futures, options, stocks, etc. Here I'm going to share you total the knowledge which I have gained till now. I'm working in a private company. My I don't know whether I can able to show my face to everyone. Whether the company rules may be violate or not, I'm not sure. That's why I'm not interested to show my face. So these many days I'm in dilemma whether I can come with a video or not. So finally I decided to share my total knowledge which I gain to everyone. Please uh, subscribe and like and forward to as many as people. Here I'm going to discuss on importance of the money and how we what's the benefits in the stock market, what are all the other tools are there available in the market, so where else we can invest those things. See, first of all I am going to show you the compounding uh, uh, method. I will take from Google. See, compounding interest for better. See, in stock market, earning 10% per monthly is very basic. If you follow each and everything, okay. Um, uh, if you follow one by one, whatever my topics, okay. Suppose it's a, I'll show you the rupee. Suppose if I have 2 lakhs, if I'm getting 10% annually for 5 years, so to calculate after 5 years, the amount which I have invested or which I have started for trading, the 2 lakhs turns into around 6 crores. 6 crores 8 lakhs 96,327 for 5 years. This is the magic of compounding interest. So many members, they don't know. They simply think that stock market is like a gambling, or it will give 100% returns within days, or many users, many persons who trade in the stock market will get loss. Yeah, total. If you see intraday perspective, who are doing the as per SEBI new data, around 92% people are getting failed doing the option trading. So the reason why they fail, we knows. So it's not simply like an investing money now and taking money tomorrow, or with the amount to simply buying the options without having any knowledge, without having the simple discipline. So if you do those things, you will fire your hands. Total your money will going to lose. Okay, we want to follow certain rules, steps, so everything. So if monthly 5% earning is very easy in the stock market if you follow many things. So I'm going to share all those knowledge as a videos. See, you please follow, and try to understand, note down the notes, everything. It will be very useful for you. Nowhere you will get this type of information. So I'm going to start from basics to end. Okay, yeah. Now our YouTube channel name is Money Flows. So I have started recently. This is my first video. Please like, subscribe and share. Who are interested, we'll go to get into the topic. See, first of all, what is the importance of investment? Why we want to do investment? Because mainly there are two reasons. First of all, we need to satisfy our needs. We want to acquire our goals, like buying a car, home. So I want to buy necessary needs for my children, myself, etc. So no, who says I don't want money? Everyone needs money. Okay. The other reason is inflation. Suppose if we have 10 lakh now, so after 10 years, the value of 10 lakh will be no very very less, like 1 lakh now. Example, if you take before 20 years, if we have 1 lakh before 20 years, it's a very huge amount. But now 1 lakh is no value. You can't buy any even car, land. Before 20 years, you can able to buy even big house with a 1 lakh. But now you can't even buy even 1 cent land in the major towns. Okay. So every year our inflation will rise. In order to sustain with the inflation, we want to keep on increase or make more money. So money whichever you have, you want to make it as a rise, double, triple, four, LF. If you keep simply that money in your home, there is no use. The value of money will come down when the time is increasing. Okay. Yeah, there are different types of investments are there. So among that, we know that bank fixed deposit, real estate, stock market, mutual funds, in the stock like stocks, mutual funds in the stock market, cheat funds, private finance. Okay, for everything, whichever I am showing here, everything has an advantages and limitations. First of all, talking about the bank fixed deposit. So it's an fixed for 5 years, 3 years. The rate will be around 7% or 7.5. It will vary for the senior citizens. Okay, this is the safest investment, but returns are very very low. Okay, you can go for post office scheme as well, but returns are very low, 7%. Nowadays we are getting inflation as around 6%. So sustaining the inflation is very very difficult for us if we go for the bank fixed deposit. Next thing is real estate. But the only thing advantages in real estate is it will we can't uh, it is the one which has a domestic growth in the past 40 to 30 to 40 years. The limitations in the real estate is it required a huge amount of capital. Okay, and also we can't liquidate whenever we want. Suppose if I buy one land in the outskirts, whenever I want, maybe the rate will depends based on the brokers the that land situation. So immediately I can't able to liquidate. I can't sell to if I want emergent money. I can't able to send immediately. Okay, that's the limitations in the real estate. And two, we need to explore all the capabilities. The real estate. Some trades also there. So Gondas, rowdies will come and they do some false documentations. So those things we need to go for to wander around the court. Okay. Coming to stock market, yeah, I will talk stock market later. Chit funds, private finance. So we can get even 2 rupees interest in if we go in the chit funds. The only reason is we can't trust the chit fund owners. So there are the local chit funds owners also available. Even they may cheat. There's no guarantee in that. Same as private finance as well. Coming to stock market, buying a shares, stocks, the mutual funds. Okay, it's day by day it is increasing in India because now many members have awareness on the actually how the stock market works, the importance of the companies, how the company gives returns. So whenever you if you invest in the stock market, If you want to liquidate it, if you want to sell shares, you can able to encash it within day. So that is the advantage in the stock market. Okay, like mutual funds. You see, mutual funds also buying the stocks, but we won't analyze or research our own. Here the companies will be there, like HDFC mutual funds, SBI, etc. They will have their own team. They will analyze and they will give us as a unit. If you invest that, it will also give you around 20% per annually growth. Okay. So now stocks is the one where we are going to put importance. We want to analyze based upon our knowledge, we experience. So we want to analyze it and we want to hold it. Then we can uncash it, can sell it whenever we want. Okay, the advantages of stock market is we can even start with a very minimum amount. The 100 rupees, 1000 rupees also we can start. Okay, we have a demat, easily you can able to start the investing in the stocks. That's nothing but a companies. See, in India, ordinary common investors, common person feels the stock market is a gambling. Is it really gambling? Investment or trading? No, because if you think about a gambling, you don't know the outcome. If you put a toss, you don't know the outcome of the toss, whether it's a head or tail. Whereas the buying a stocks, trading a stock, buying the index, options, certain rules, techniques, if we follow, we can able to predict the outcome. Okay, even if it goes wrong, we can able to come outside with a minimum loss. That is a thing we are going to discuss in the coming videos as well. Okay, how to buy, when to buy, where to sell, when to sell. Okay, things. The other thing is, question is there a way to get regular income in trading? Yes, you can get regular income every month, 10%. You can get the returns. Nowhere you can able to get that one. If you take any business, even annually they can able to get that 10 to 15% or 20%, but they won't get every month. But that we can able to achieve in the stock trading, index trading, option trading. Okay, we are going to see in coming videos. Do we need to quit a job for trading or investment? No. So many members quit job and they start doing the daily trade. It's absolutely no need to quit the job. For investment, you no need to even watch market daily. Weekly, if you watch, also fine. Okay. But thing is, you need to know when to enter, when to exist. If you want to become a really successful trader and investor, the first thing is you should not do trade daily. Whenever you get opportunity, you want to enter the market. Whenever you get opportunity, you want to exit the market. That's it. You should not do trade daily more than once, or revenge trading. Okay, over trading. Those things, all these things you need to avoid it in order to make you successful in your investment or trading career. Actually, in markets, see, there are actually two types of markets we can call: primary market, secondary market. Primary market means the person who handles the company, like a CEO or owners, board members. They are the one who going to take the decisions before start of the before announcing to the public. They have they they can able to change the decisions. They can able to take decisions based upon the board member and investors approval. They're the first person who knows the thing what is happening in the market. Second thing is secondary market. It's like investors, traders, the person who invests in the stocks or index, who trade in the indexes. There comes in the secondary market. So like us who are doing called as in secondary market. So now I'm going to show you the real-time market scenario, like S&P, US market, Indian Nifty, Hong Kong, China, Hang Seng One, Nikkei, Japan's one. So out again. So this is our Nifty 50. The past how performance of our Nifty 50. If you are seeing here, from 1990 it has started, Nifty. From 1992 2003, market is in the flat almost. It has given only some, even not given 100% return in the 10 years. From 2003 to 2007, it has almost 1000 to 5000, 6000, 6 times it has increased, it grown. After during this 2007, fall down around 50%, 60% due to the financial crisis in 2007. Okay, mortgage crisis we call. So from 2008 again the market got rally. It fight for again 4 years to cross this high. After crossing that high, it now went to around 9,000, 8,800 in 2015. Again dip, again up. During Corona, it fall down around 50%. Again now it is 22,000. The growth story of India, which is showing in the market as a market. So Nifty is nothing but, you know, that top 50 companies market capitalization. Okay, just a index barometer. Then it's a US market, S&P 500 performance of the US market. From 95 to 2009, around 14 years, the market is around 700. There's no more growth. When come down, when come down. Now it is in around 5,000. Why I am showing these things means always market will not be in the growth pattern. If you take Japan, in 1990, 89, it is in around 38,000. After 1990, 34 years it took to cross that high. 34 years. So whoever invested in 1989, some stocks maybe some stocks went to bankrupt. Okay, some stocks even not given much returns. Okay, whoever entered here this low, it may be from 8,000 to around 40,000. 5 times it has grown. Here from 38,000 to 8,000, around 90% of market fall, 80%. Now it is there. So why I am showing this is market will not be always, it will be in the growth pattern. We need to understand, analyze, we need to follow the market, we need to predict the market, and then we need to follow it. So that is what we are going to explain in the videos in detail. Okay, I have wrote even one book, but I did not publish that one. But finally I came to show you now. See, if you take Hang Seng, 2007 it's a peak. After that it has not crossed that height till now. It's around 23,000. Now see at 12,000 only. Half of that. Okay, there are many things we need to consider here for investment or trading. It's not like simply investing and keep going. Today in Indian markets and US markets are booming. Who knows? We don't know. Tomorrow, if any issue happen, no. Suppose if you have bought 1 lakh or 1 crore rupee now, if any crash happens because of other reason, we need to predict that one. We need to identify that crash, and we need to sustain even the market crashes. That's what our importance of intelligence comes, our key role will play. Okay, how you can survive the market, when you can exit the market. See, if you invest here, if you exit here, you will be in the good profit. If you sell here, if you buy here, you will be in the profit. But you need to know where to sell, where to buy. So to know that one, you need to follow my materials, one tutorials, one by one videos which I'm posting to support us. If I show one stock in 2010, ARSS Infra, I have invested this stock. See, it has listed around 600. It went to 1,200 within months. But after that, now it is around 19 rupees. Whoever bought here, take example, they bought purchase for 1 lakh. If that 1,300, if they purchase 1 lakh, if it come to 1,000, around 30% loss, they could not have sell that one. They will keep on wait. It is almost become zero. This is the downtrend in the market. So everything will be there. You need to analyze, understand the market, growth story of India, growth story of the market, growth story of the sectors, growth story of the companies, predict the company performance, how the returns will come, how much performance the company is going to show, perform in the coming days. Those things you need to analyze and you need to follow it. Okay. The other thing is, see, from around TVS motor from 2002 to it is around 2930 up to 2013. So now it started rally from 13 to 18. It almost 10 times. Then again it fall down 50%. Again now it's in 2000. How the company shares are increasing? Why the company shares are decreasing? When we want to enter? When we want to exist? All these things we need to understand, study, practice, invest, and earn the lot amount. In stock market is the place where you can earn even 10 times of returns within the less number of years, 4 years, 5 years. And also this is a place you can able to lose entire your capital as well. If you are not have the discipline, not have the patience, if you don't know how to buy, which stocks to buy, how many days to hold, you are going to lose. So in order to save side, what you want to do? We want to follow some formulas. What formulas? You want to invest the money, even the money company got, even your stock market got zero, you need to sustain that. And in order to do that one, you need to invest or you need to trade the money, whichever become zero, even zero, you should be survive with that. Only that amount you need to invest in the stock market. That is the primary basic one. Okay. Suppose if you are having 1 lakh rupees, you want to invest only 20% of that 1 lakh rupee into the stock market. Okay, that is the first simple basic rule. Okay, it will make you to avoid the emotions as well. So we are going to discuss one by one. Okay, now what I just now I shown you the graphs, real time graphs. So how the graph pattern happened? So to predict that one fear, no, as a pro, you need to have, you need to know the fundamentals, technicals, and you need to control the manage the psychology, fundamentals of the market. Example, Indian market, China market, US markets. Fundamentals you need to analyze. Fundamentals. What are the fundamentals? If you want, you can note down fundamentals like geographical one, political one. Okay, like if any single party rules in the central government with a majority MPs, so they can able to take their own decisions to sustain the growth of the country. If government is formed with the two or three parties, one party says yes, one party will say no. Finally, they can't able to take the bold decisions. Okay, so like politicals, then fundamentals of the sectors, fundamentals of the stocks. If you see in India, day by day mutual funds, like we categorize mainly two things, two types of investors, big investors like FIIs and DIS. See, in 2007, when we got that financial crisis in US, our market almost collapsed 60% within 1 year. But now even market in US markets or Chinese markets have trouble. Indian markets not suffering that much because day by day the investment capacity in Indians are rising. The number of persons coming into stock market has gone dramatically increased. Okay, drastically changed. So it will change, it will increase and it will grow forever in India. Okay, fundamentals of the sectors like IT, banking, automobile, etc. You need to analyze the fundamentals. How, what's the balance sheet of those sectors, companies, main companies. Then fundamentals of the stock. What about the management? Who is the management? Majority shareholder. How they enter into the other markets. What are the business they have now? Within 5 years, how the business going to perform? So these things you need to understand it. Okay, these fundamental technicals I will explain you in the coming videos in detail. Okay, now I'm going to explain you in the highways. It's a base video. Next, technicals. See, there are under number of technicals are there here in the market, but we don't need to have those many technicals for a day trader or investment purpose. Very few basic tradings is enough, like moving averages, trend lines, candlesticks. Those are enough. No need to have all those trend lines. But how these technicals form, those basics I'm going to discuss now. And psychology. We need to control the emotions. One should not have emotions in doing a business, any type of business. It will make you a fail in that business. So if you have managed the psychology, you are the 100% successful in the trading, especially not only investment, trading. For investment, you will have psychology. You can manage the psychology. There is no emotions or fear of missing opportunity, greed, pays there. Okay, whereas in tech trading only you are going to face this psychology point. Then you are going to lose amount of loss. If you manage it, okay, if you maintain well, everything will be good. Don't expect with 1 lakh, I want 2 lakh, I want 3 lakh. It can possible, but if you go in that method, becoming zero also possible within the days in the trading. Simply follow my material, follow the steps, follow this fundamental, follow the rules which I am saying. Easily you can earn 10% per month without resigning your job. You can do your job and you can do this one. That is a specialty in my YouTube channel. Okay, nowhere you can get this one. I'm not encouraging you to quit the job, do day trading, continuously professional trading like a trade, because you can do investment or trading even with doing the other jobs as well. That's what I'm going to teach you in coming times. See, timings are very important. Okay, when to enter and when to exit, this is also important. So without that, you can't able to earn the money. Okay, or you can't able to save your losing, protecting your losses. How you want to trade means, if you take or invest one company, If you get loss, 1 rupee, if you get loss means, if it goes wrong to your trade or investment, you want to get at least 10 times. Only then you want to take trade. Otherwise, you need to simply quit the trade. Don't trade. Trader means not doing trade daily, multiple times, over trading. That is absolutely false. If you do like that, you are going to get the loss in trading. Simply stop trading, do investment. Okay. Intraday. Don't trade in intraday. Forget about intraday. In order to get you successful trader, don't do trade daily. Don't do multiple times in a day. Don't do intraday. Intraday is for finding the opportunity to enter and waiting the opportunity to exist. That is the why we are seeing in the intraday. Okay, you don't do multiple times trade. Okay, see, this is a two technical things I'm going to explain you, which are fundamental and basic technicals. Dow theory and allied wave theory. See, if you understand these two things, you are almost 50% successful in investment or trading. All the technical parameters have formed based upon these two theories mainly. Dow theory has invented before 100 years by US guy, Dow Jones. That's why the name came Dow theory. Normally, if suppose 9 persons follow in one way in stock market, the 10th person should follow in that way only. If you follow opposite side, you are going to get the losses. That is the magic in the stock market. So that's why people follow these techniques. They call it as a Dow theory, all used to follow. So if you know these two theories, these are very crucial for the investment, either for long-term investment or short-term investment, trading, swing trading, positional trading, intraday trading. For anything, these two things are important. We'll go one by one. See about Dow theory. We have Dow theory 1, 2, 3, etc. But as a basis, I am saying you Dow theory. Please understand it clearly. Suppose take this as a market index. See, market has fall down due to some other reason. Now after fall down in the market, it has consolidated. Then it start rally. Then again it is consolidated. Then again it fall down. Here, see why the retail investors like ordinary, retail people like individuals who enter in the stock market. So we call as a retail people like me, you all are retail people. We are not institutional investors. Institutional investors will have some strategies. They have huge amount of money. There are some companies like JP Morgan, Morgan Stanley, HDFC, etc. They are part of investor bankers. Okay, they are different. We are different. We need to what we need to do. We need to follow them. Okay, what they will follow? They will follow these techniques only. So why retail investors keep on failing means, suppose see here stocks think that this is one stock fall down. Here this is a place where the very worst performance of the stock happened or index happened. Say example Indian stock market we think. So performance of the Indian stock market is not good. It's going to be zero. No companies are coming. No government is not good. During those time, companies performance very bad and global also very bad recession. Then it fall to down level. Even going times, even if you get the bad news, the market will not fall below this line. Now we are getting bad news for a company or a market, even though GDP is very negative, growth is not there, inflation, even though it's not falling. This is the place where the institutional investors will get into. They will buy first they will start buying the big companies, index companies. That's why index will start recovering. So if it start increasing, if it break this line, what happen? Technical persons will come who are doing technicals for monthly, weekly. They will get into. They will start buying. Again, it will go up. That's why we call market up, markup. After here, because of the overbought situation, it will fall down for less time, less amount. After that, it will go up. Again, it will go down. Again, it will go up. This is the place where it's a called distribution place. All the even local TVs will say that Indian markets are booming. All our money will go double, triple. So this is the place where the institutional investors will be uh, taking their positions, booking the profits, even partial. If it break this amount, no, this level, so it will start falling. It will start falling. Technicals will do the shorts here. Again, it will accumulation phase. Again, it will start going up. So this based upon the fundamentals. If you talk about technicals, nothing but charts. These are the technicals. Based upon these theory only, they will get RSI, moving averages, everything will come for a individual stock or indexes. Why retail investors are failing? We will enter here. We will see local channels. We will see, this company is boss is 1,000 rupees. It will go to 2,000 rupees, 3,000 rupees. If the retail investors enter here, even blindly or analyzing, up to here they will get profit. Whoever entering here, they are going to get the loss. Suppose if I entered for a 1 lakh, if I get them loss, I will not come out because of the emotions played there. So I will stop, wait, it will come up to here. Like I shown one chart now. Take as an ARSS as an example. If you see here, what I said, this is accumulation phase. Accumulation phase, markup, again accumulation phase, markup, accumulation phase, markup, accumulation. Accumulation we call as a consolidation. Then markup, again down, overbought, sell down, again consolidation, again rally, again come down. Again here some profit booking, we lost. The technicals played here. Again consolidation. Again it's a rally. So main thing for us is we need to identify the growth stocks. We need to enter in the consolidation phase. We should not enter even the peak or bottom. We need to enter into the consolidation phase and we need to put the stop loss because we don't know. We think that from after here the market will come down or market will go. We don't know. So if you enter here, you want to put here as a stop loss. That will protect you. Stop loss is the key main one you need to follow if you are entering into the market, even for investment or trading. Okay, all things we will see in detail coming videos. Say examples. Say Nvidia, example. See, it gave more than 300% returns here from 24, 38 to 3, 800. 380 is a 10 times, 720 times it has given the returns within the 5 years, 19 to now. This is what we need to identify. That is what I'm going to say in the coming videos. If you want to detail the Dow theory, you can get into the some YouTube videos also. In Dow theory itself, you will get. Go through it, you can get. Second thing is Elliott wave theory. It's nothing but market will not go straight as a 10 line. It will go, it will fall, go, fall, go, fall. Here, this is a place we need to identify. If you identify here, you will get the entry and exit. Some motive waves and corrective waves. See here also. High, low, high, low, higher high, higher low, higher high, higher low. You know, there's no higher high. So, consolidation. We don't know. Sometimes after here also, it will go above. So here if you enter, no, you need to put here as a stop loss. Then if you come down, you will get this, you will get incur less amount of loss. Okay. This is what you need to know. Alright, wave theory. This is one more theory, which usually all the technical persons will follow. See, institutional investors will enter here. That's what we explained earlier. Big players, we call them as big players. We need to follow them. If you follow them, You think this is just one index or stocks, anything. All will follow this manner only. So here consolidation place you need to enter. Again, consolidation you need to put some profit, or if not, you want to put some stop loss here. Okay. Retail investors all will see TV. This is the time where all the TV will explain. It will say, market is rising. It will go there 2 times, 10 times, 100 times. Who knows what will happen next time? Before happening news, the market itself will give you the picture. You need to understand the market. You need to study the market. What is going to happen? How it is going to react? Then we need to take pro action, either buying or selling. In that manner, you can able to encash the market. You can get the huge amount of money. Okay. See, technical traders will buy here. Technical traders will take shots here. See, money management. This is important. If you are entering into the stock market, you should not take the debt. You should not borrow from others with interest. You should not invest here. Okay. The primary principle is whatever money you are having, you want to use only 20% of that capital. Whichever not used by you, even market becomes zero tomorrow if it collapsed, even though you need to sustain. Then only you can able to manage your emotions. If you invest all the money, whatever you add in money here, if it becomes zero, no, again it will be having a big problem. Okay. You need to control the emotions. Okay. Say example, if you're having some 100 rupees, you need to invest only 20%, 20 rupees in the stock market. In that 20 rupees, 90% in investment, 10% in the trading. So 90% of 20 rupees is 18, 10% of 20 is 2 rupees. These are the topics which I'm going to cover in the coming videos, friends. So whoever like my video, whoever like this content, please subscribe, share, provide the comments so that it will help as a feedback. I will try to improve coming days. It will help or it will motivate me to provide more videos to you. So how to buy stocks, when to buy stocks, when to trade, how to trade, what are the technique steps we need to follow. Those things we are going to see in the coming videos. Thank you. Thank you all.